This is Alan Farley from FX Empire. Twitter is trading higher by more than 20% in Monday's pre-market after Elon Musk purchased a 9.2% stake in the company. Taking a look back, the stock broke out above the 2013 high right here around 75, broke out in February, got up to about 80, and was only up there for about 4 bars before failing to break out, entering this consolidation which broke 200-day moving average support right here in October. This was probably after earnings or third quarter earnings. Stock entered the steep downtrend. Jack Dorsey resigned on November 29th, and he was replaced by Parag Agrawal, who initially folks thought, well, he's going to be able to monetize Twitter a whole lot better. But then folks had looked at this guy's record and really came away kind of disgusted, or at least many folks did. Stock opened around $52 and then sold off, dropping to the mid-40s by that close. Well, that selling pressure continued all the way into February, down to a 20-month low. Now, the stock's gained a little bit since that time, not much, and now it's gapped up to about 47, 48. Now, as you can see, this is where 200-day moving average resistance comes into play. That started right here at this gap, which probably has lots of volume on it. I don't think we're going to get lots of upside from here, perhaps trade into the low 50s, but this is kind of fully valued right in this area, given what we know right now. Let's take a look all the way back to Twitter's history, and you can see where this failed breakout was in 2021, and it came down to about 3/4 or about the 786 retracement of this rally wave in February. So this looks like a good low for sure. In fact, the monthly stochastic is picking this up. We have this buy cycle, but Rome wasn't built in a day, and there are plenty of headwinds for social media companies right now. And Musk has plenty of enemies in Congress, so we can wait and see how this is going to play out. On the weekly, you could see that we're accelerating now into the overbought level, and this upside, take a look here, because we have the 200 week moving average of 44, and we have the 50-week moving average, which is aligned very perfectly with the 200-day moving average. So once again, here we have a resistance going on. Now, this resistance came into play. It's the first time it's above this or below this, back above this level, excuse me, since July of 2020 right here. But as you can see, this is a very highly contested area, so I think we're going to run into a lot of contest here. Finally, this is where the double top breakdown was. So I don't think this is a good spot to buy Twitter. Elon Musk's work is cut out for him because Twitter is really going crazy on the censorship route in the past few months with some very, very questionable bannings, and they've even eliminated a few accounts for very questionable reasons, and I think that's just not going to fly as we get into the middle of this decade.